So you think you have what it takes to become a Bitcoin billionaire?
Huge news in cryptocurrency today.
The SEC has officially approved the Bitcoin spot ETF.
This is going to make investing in Bitcoin a lot easier.
The SEC's decision this week to approve Bitcoin ETFs in the United States is a big milestone for Bitcoin. It brings what the uninitiated see as shadowy crypto into the mainstream and makes it easier than ever for people like you and me to not quite buy Bitcoin, but get pretty close. A Bitcoin ETF certainly exposes you to the same wild ups and downs. So how does it work? Okay, so let me start by being really clear. This is not going to be a guide for how to buy these things. This is more of an explainer of what they are and what an investor would be buying into. These folks are going to help me through it. Jacob Silverman and Claire Brownell. They're both tech and crypto journalists.
So this has been a long time coming for the crypto industry.
It gives a whole new class of investors access to Bitcoin.
Okay, so what is a Bitcoin ETF? Well, you can think of an ETF like a basket of investments. So if I want to buy individual stocks, I could buy a share of Microsoft, Apple, Amazon, like basically anything I want, right? Boeing, Nike, Home Depot, Starbucks. Or I could buy an ETF, the basket, which might have all of those things inside. There are currency ETFs, real estate ETFs, technology ETFs, green ETFs.
A fund is simply a way for investors to pool their money together in a big old pot.
It can give you some exposure to a sector that you might not know enough about to feel comfortable picking an individual stock.
There are even ETFs that track entire stock markets. Like if you want a piece of the entire S&P 500, there are ETFs for that. A Bitcoin ETF is sort of the same thing, except it's a basket filled with primarily one thing, Bitcoin, as the underlying asset. But wait a second, you might say. You just told me that an ETF is a basket of many things. If the basket holds just one thing, what's the difference between buying a Bitcoin ETF and just buying Bitcoin directly?
You don't have to necessarily have the thing itself or have some of the risks that might be involved with the underlying asset, but you can still have some kind of financial interest.
Let's face it, buying Bitcoin can be intimidating. You have to find a reputable crypto exchange, hopefully one that doesn't make your money disappear.
FTX has collapsed in recent weeks, from being one of the largest cryptocurrency exchanges to losing 99% of their value.
Then you have to set up a digital wallet, and you ultimately are responsible for the management and security of that wallet. So try not to lose your private key, try not to get defrauded.
Berggren and his girlfriend, Zoe Westervelt, say they had $24,000 stolen from them, hacked out of their Coinbase account.
And definitely try not to forget that you even own Bitcoin to begin with.
There have been all kinds of wild stories of people who, had, their Bitcoin on a hard drive and the hard drive got thrown away, and they've, tried to raise money to dig up the landfill to try and find the hard drive that was on.
With an ETF, a fund manager like BlackRock or Fidelity, giants in the investment space, they buy the Bitcoin, they manage and secure it, and it all happens with layers and layers of regulatory approval and oversight by financial authorities like the US Securities and Exchange Commission, the SEC. You're just along for the ride. But this means three important things. One, you don't actually technically own any Bitcoin at all. The fund manager does. You own a share of the ETF, the basket, which represents a claim on the Bitcoin being held by the fund. Two, since they're doing the work, you have to pay for that service. There's a management fee.
For the money managers, for Wall Street especially, this is attractive because they're not, they'll trade anything.
They got to make their money somehow, right? But three, and this is the big one, you are just about as directly exposed to the volatility of Bitcoin as you can be, even though you don't own any yourself.
Bitcoin is extremely volatile.
Let's look at the price of Bitcoin in US dollars since 2015, when it really started shooting up in value. By December 15th, 2017, it smashes through all expectations, approaching $20,000 a coin. It doesn't last long. it immediately collapses, losing more than 80% of its value over the following year. From that low point, the value almost quadruples again over the next 6 months, stays in that ballpark for another year before showing explosive growth through the early pandemic. More than $60,000 US for a single coin. There's a spectacular crash. Bitcoin loses almost half its value before reaching a new all-time high in November 2021, and then another big crash. 75% of Bitcoin's value wiped out yet again. Now, it's rallying back, up about $1,000 a coin since the SEC gave the green light to Bitcoin ETFs. So, is Bitcoin volatile? Yeah, for sure. But is it good volatile? As in, even its collapses, the valleys, keep getting higher and higher. That question is what makes the ride so attractive to so many people. But if you read the SEC announcement about giving Bitcoin ETFs the green light, it's almost comical in a way how begrudging it is. And by that, I mean, they make clear that legal challenges and court rulings pushed them into this approval. And look at the message that they end on. Bitcoin is primarily a speculative, volatile asset that's also used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing. It continues. We do not approve or endorse Bitcoin. Investors should remain cautious about the myriad risks associated with Bitcoin and products whose value is tied to crypto. But to be clear, they're just saying Bitcoin itself is volatile, not that the ETFs that they're approving are an unsafe way to buy crypto. In fact, you could already buy Bitcoin ETFs before today. They've been available here in Canada for years. Now, it's true. If you bought in when those ETFs first popped up, you've generally only lost money over the last few years. But you can also see they're on a big upswing at the moment. And the thought with this latest SEC approval in the States is that it opens up a huge market for a type of crypto that's still yet to see truly mainstream uptake. The US is the world's largest capital market. The biggest institutional investors and asset managers do business there. And as such, billions of new dollars are expected to now pour into the Bitcoin market.
Just the fact that these big name financial institutions are getting in on this action is something that's seen as something that's a major change, a major development.
Even as people in crypto and Bitcoin especially talk about their anti-Wall Street or anti-TradFi, this is a big deal. It's going to bring in a lot of money, and it's going to move them towards the kind of interconnectivity with traditional finance that I think a lot of them really do seek.
In the end, this boils down to legitimacy. To Bitcoin supporters, it's a sign that the establishment is finally starting to take Bitcoin seriously, or they see it as a way to make oodles of money themselves. But at least in the short term, one thing seems absolutely certain. More people will invest in Bitcoin. That could cause the price to go even higher, and the incredibly speculative roller coaster ride, it will continue.